I mean, I really hope that it is apparent to you, because I'm seeing what I've been talking about for so long actually unfolding. And it is not the time to be a deer in the headlights, because what happens to those deers that get caught in the headlights? That's what happens. And this is where we are. So let's first start talking about inflation. Consumer inflation expectations hit an 8-year high in a New York Fed study. Now, here's the problem. It's not the actual inflation, because that is built into the very foundation of the fiat currency. It is if you expect inflation, and if you especially expect it to run hot, well, then it's harder for central banks to control even more inflation. Typically, if you think there's going to be inflation and you want to buy a car or you want to buy a big ticket item, you will pull that purchase forward. But in this environment, they want you to think that it's transitory so that everything stays balanced, and mostly so the central bank stays in control. But they are not in control anymore. They have the semblance of control, but everything around them is getting to be more and more expensive on an ongoing basis. So, frankly, no, inflation is not transitory. Look at what's happened with natural gas. Now, why does natural gas matter? Maybe you think you don't use it, or you use a little bit of it, or what have you. I mean, I have gas here, and the bill's not that, although it's changed a lot since I bought the house, but it's not that bad. I think it's something like, I don't know, $60 now or something like that. But surging natural gas prices means it will be costlier to power factories or produce petrochemicals, rattling every corner of the global economy and fueling inflation fears. For consumers, it will bring higher monthly energy and gas utility bills. It will cost more to power a washing machine, take a hot shower, and cook dinner. And it might just be noticeable. And that's been the problem for them with inflation. As long as they could say, well, we haven't hit our 2% target, which in the real world, we have more than hit that 2% target. But if people hear that and believe that, well, then the Fed still remains in control. And remember, this is all about confidence, because this is a con game. So what's happening right now with inflation is that it is testing the confidence of the consumer. And I have a feeling, and remember, the only thing that's really keeping this whole system together at this point is confidence in the public having confidence in the dollar, in the stock market. And I say that with hesitancy, because I have no confidence in it, because I've watched its erosion. And I've also now watched the SDR get into position with that massive injection of new SDRs. And if you haven't seen the video yesterday, go watch it, because they're positioning to take over as the world reserve currency. And the country that's going to be impacted the most from it is going to be the US, because the dollar is the world reserve currency. I mean, arguably, that really hasn't been true since like 99 when they created the petrodollar. However, we still have the title of it. And where they say that the reason why we retain that title is because we have the deepest and most liquid markets. All of this and the inflation and and losing trust in the central bank's ability to have the markets back, and therefore to have your back, and therefore have the ability to keep pushing the markets up. This is coming to a theater near you, but it's already happening at the same time that demand for the dollar bonds is declining. And I've been seeing more and more of these headlines. Now, dollar bond demand in Asia hits the lowest level. What they're really referring to is corporations issuing dollar-denominated bonds. They don't earn dollars, but they'll issue bonds denominated in dollars. That means they have to go out and buy dollars in order to pay these bonds. So this is the lowest level, and it's showing a loss in confidence. Further loss in confidence is Japan's, the world's biggest pension fund, cutting the bond weighting, the U.S. bond weighting, by a record. And I'm seeing more and more of these kinds of headlines. So if this is all about confidence, the world is also losing confidence in the US dollar. Why do you care about that? Because the world will utilize the substitution fund over at the IMF. And they will convert those dollar-denominated bonds and currency into the SDR-denominated bonds and currency. So that means that all those excess dollars have to come back to the US. Now, in theory, because it hasn't been tested, so the theory is that the IMF will have the ability to determine how quickly those dollars come back to the US. But of course, that's all going to be based upon whether or not they remain in control. And that's the problem. And that's the problem with expectations. Now, a week or two ago, we talked about Venezuela lopping off or getting ready to lop off zeros from their currency yet again. So this just came back, but at the same time that they lop off those zeros, they are going to be issuing a digital bolivar. So the question that I got on Q&A last week was about the digital dollar. And what I said was, and this proves the point, and it will prove it over time as well, that once we go to a digital dollar, that's not over yet because behavior is not changing. And the only way that they can go into a brand new system is if they get rid of all of the debt from the previous system. Rising gold price is an indication of a failing currency, and without fail, every time there was a major occurrence, and I'm not saying that you saw the major occurrence, mind you, but there was a major occurrence like that issuance of those SDRs, like when China entered the SDR basket, and many other times. I mean, look what happened in the silver squeeze. They can't put a flipping basket of silver together for SLV. They had to quietly change their prospectus. But you've got gold and silver down at these levels. It's a flipping gift.